Hi, this is Joe Rabil with Rabil Stock Research. So I've been providing technical stock research and consulting to institutions for the past 35 years and working with individuals over the last 4 or 5. So what I want to do today and start out the show, we're going to look at the S&P or go through the market and look at the individual stock requests that came through. But I want to start out with a simple approach using 2 moving averages to help you define the trend. And then when we expand that to multiple time frames, I'm going to show you how that can be a huge advantage. All right, I've got the spider chart up and I've got the 4 time frames I typically look at: monthly, weekly in the bottom right, daily in the upper right, and hourly in the upper left. All right. Now, what we're going to do here is I want to just basically define the trend. All right. And using just moving averages. I have spent a decent amount of time using the zigzag to help look at the price action to define the trend. And we want to do that first and foremost. But as a great supporting tool and something that's incredibly simple and really doesn't get off course very often, it's almost impossible for it to. We can use these 2 moving averages together as a buddy system. All right. Now, what I'm going to do, I'm going to just show you very briefly what I'm looking for. So if this is the 18, I've got an 18 simple and a 40 simple. And if the 18 crosses up through the 40, like it does here, all right, and it's rising, we want to wait for the 40 to start rising too. The moment we have the 18 above the 40 and then both lines rising, we have a confirmed trend to the upside. All right. Same thing holds true to the downside. If the 18 crosses down through the 40 and then both lines start declining, then we have a confirmed trend to the downside. If we have anything else in between that, it would be neutral. All right. So through this period here where we have a declining line and a flat 40, right? Then it's neutral. If either of the lines are not rising or falling together, then we're in a neutral situation. So we can just look at it. Let's just focus in on the weekly chart, and you can see where in 2023 we did have both lines rising, and the 18 was above the 40, and then the 18 actually topped out and rolled down in the end of the year, and then right about the start of the year, right here, we had the 18 above the 40 and both lines rising. All right, so from that point on, the trend was positive until we got into 2025 when the 18 actually started to decline. Do you see how this 18 started to roll over? So for this entire period here, we basically have the green light, all right, to trade on the lower time frame. We can go down to the daily chart at that point and look for opportunities because we know the trend on this time frame is up. Now, we want to go and look at the momentum conditions and make sure we're good. And the momentum started slowing down in the later part of 2024 and early part of 2025. So you might at that point have been a little less inclined to be looking for setups. But in terms of just the trend, we had from this period here through this period here where we're basically in an uptrend on the weekly chart. All right. Now, if we go and we look at the daily, you can see that it's a lot more active. There's a lot more signals where the 18 turns down, right? And that happens over and over again. But if we use that in conjunction with different time frames, let me just show you what happens. So what I've done now is I've got a daily chart and I've overlaid the green period is where the 18 and the 40 on the weekly chart are rising. All right. And the 18 is above the 40 and both lines are rising. So we know we have the green is basically telling us the weekly chart is in an uptrend. All right. And then on the daily chart, we basically had 18 above the 40 here, both lines rising. And then at this point, we go into this neutral phase. All right. And then it happens again here and it happens again here where the moving averages aren't lined up correctly. All right. But when we know we have a bigger time frame, the higher time frame in an uptrend, these yellow areas are opportunities. All right. We want to use these. And in my course, I basically go through the 3 or 4 different strategies that I'm looking for using the moving averages and the momentum to help you identify an entry. Because what we're trying to do at this point here, we're trying to identify the first sign where things look like they're getting back in line with the long-term weekly chart, right? It's because we know that this is an interruption. This is showing that there's an interruption in the daily trend, but it's going counter to the weekly trend. So I call that an opposing trend pattern, where this trend is going opposite of the bigger trend. We want to use that as an opportunity to be a buyer. So we want to use the downside crossovers to our favor. We want to actually take advantage of them and look for opportunities to be a buyer and look for them to fail, and then we can get in for the next leg to the upside. And that happened twice here, and then the third time it didn't last very long, but we had momentum divergence in place, so you would have been aware of that. Now, if you notice what happened at the end here, we're in basically right around the middle of February, the moving averages on the weekly, the 18 turned down. So the 18 is still above the 40 right now on the weekly chart, but they're not rising. All right. So now this is yellow. This is in that yellow space on the longer term time frame. And then if you look at what takes place, this red line is basically showing you where the 18 is below the 40 on the daily chart, and both lines are declining. So in this time frame, we're actually down, right? This could be red all through this period on the daily time frame. And then we would use the hourly chart and look for signals, these counter trend signals, as opportunities. So think about these. I call it looking at the market in 3D, right? You want to think about it in terms of what is the upper time frame doing? What's the lower time frame doing? What's my main time frame doing? We have three different time frames we're basically trying to focus in on. And if we have a weekly trend that's up and a daily trend that's up through this period, then we can go down to the hourly chart and take advantage of pullbacks. So this period here, we can do the same thing. This period here, when basically the weekly and the daily trends are positive, we can take advantage of pullbacks on these two trends, on these two time frames. We can take advantage of the hourly chart, the one time frame down, to take advantage of the pullbacks and trade in the direction of the trend of both the weekly and the daily. Hopefully this makes sense. I want you to think about these, a simple way to keep track of what the trend is in each time frame. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. My comments are for educational purposes only. Please do your own due diligence before making any investments. All right, so I wanted to do a quick review of the commodities with the shifts that are taking place. Just worthwhile just to take a look here. So we're continuing to see the strength in gold. You see how the trend has been really strong for quite some time, but we finally got the relative strength to really kick in, and now it's going into like this advanced stage of strength. All right, and we're also seeing, even though silver hasn't really broken out and moved into that same kind of accelerated mode, you can see the relative performance improvement. And even copper, which is going through a little bit of a correction right now, but still holding support, is showing pretty good action on a relative basis to the S&P. We've gotten a bit of a change that's taken place in the oil with the break, this recent break here of support. And it's going to need, and now I think if this is going to improve, I don't know that I'd be watching the relative strength. I think I'd be looking for this to move back above the breakdown level and then form a higher low in the form of what I'd call like an undercut and rally pattern. If it can break through this low and then test it, essentially the 70 area, and get back above that and then test it and turn back to the upside, then I think we're going to see improvement on a relative basis. Now, gas has been strong. It is just in a pullback mode right now relative to the moving average on a relative basis, but we don't want to see this come back too much more. I think if it loses any more strength, especially breaking the 40, then you got to start thinking that this is more range bound down. Now, it still might be okay on a relative basis. It might be doing better, but we want the combination of the two. We're looking, and I do this for individual stocks as well. We're looking for stocks that are showing good overall pattern on a price basis with momentum, and then also have relative strength. That's the combination we really want to look for, really in any environment, but especially in the one we're in right now. Now, the reason why I really wanted to cover this is what's going on in corn, I think, is really sort of intriguing me. We have this downtrend line that was broken and now tested, and we're turning back up, and you can see the improvement on a relative basis. But I really like the price pattern, the way this is sort of cupping around and turning the corner. Obviously, if we can take out this prior peak here, then we've got a little bit more confirmation that the trend has shifted. I would say I would kind of call that going from a stage 1 base up into a stage 2 uptrend if we can get back up through this prior peak. The same thing holds true for wheat, but it's really a little weaker. It needs to get back up through here, and it's not showing the same kind of improvement like this corn chart did last week. So I would be patient there, but it isn't showing improvement on a relative basis. Now, soybeans actually started to show a little bit of life. Same pattern. I mean, we can draw our downtrend line here, and we're testing it. And now, again, if we can come back up through this prior area, then I think we have to start giving this a lot more credit. So I thought this was worth an update. Let's go ahead and switch over to the other charts. Okay, I do want to give a quick follow-up to last week's lesson, in fact, where we talked about the 50% retracement off the low. And what I like to do from that point is continue to look at the 50% retracement. So if I go to the spider and I do this 50% retracement line from the peak to the low and the rally back up, and it's not exact, but it's pretty close. It came back up and essentially test the 50% line and failed. So we know that the bears are still kind of in control here because it wasn't able to get through that area. Now I can see that with the moving averages declining, but it is good to have the confirmation, especially in fast markets and the type of movement that we're getting. Use this 50% retracement to your favor. The other thing I would tell you is, we've got pretty strong momentum in place overall. We had confirmation on the low. MACD hit a new low. DI hit a new high, negative DI, showing the sellers are strong, and ADX confirmed the move. Now we're starting to potentially turn down from here and look at another test of on the S&P would be around the 5,000 area. So I just wanted to give a follow-up to that. Continue to look for the 50% levels. Now, the way you would do it from here is you'd actually take the 50%. I'm just going to cheat a little bit. I'm going to use this here and say I'm going to do the 50% from this level. So from the low, up to here, and then the 50% retracement is going to be a level that you're going to want to know. Let's just see what that value is. Somewhere around 515 on the spider, 514, 515. It's going to be pretty important. If we come back down through that level, then you got to start thinking we're going to put a lot of pressure on the lows. So keep using those 50% retracement lines. I think it can be pretty valuable to you. All right, let's go ahead and switch over to the QQQ. So same pattern, right? We've got a bearish trend on the daily that we've retraced back up to the 18. We've got the 18 rolling over. It hasn't broken the 40 on this time frame, but we've got the same kind of strength in the momentum. Now, I mean, we can see this big volume bar here, which suggests that there's pretty good support underneath. That doesn't mean that we can't come down and test it and or undercut it potentially if this market doesn't want to cooperate and show any strength from here. But watch this 50% retracement on this QQQ as well and see if it can hold. I think that's pretty much what we're looking at. I don't like the fact that this is weakened below the 18-month line and that the MACD has crossed over. So I do think there's upside resistance in place on an index like this. Got to be real careful. IWM continues to be kind of the weakest of all of the different indices, really. And if we look at this on the monthly, though, I don't think there's a huge amount of downside in this. When we look at it in these terms, we could get a little bit more of a deeper pullback and test these lows, but we're already kind of back into this area. So I would be more concerned with something that's turning down and has room before getting into support as opposed to something like this. But what bothers me about this is the fact that the relative line continues to trade poorly. And until we start to see that shift, I think the market's going to have a real hard time here. So we got to, kind of keep an eye out to see if we start to see the other indices continue to drop and this sort of holding the support area in the low to mid 170s, then we could see that relative strength line improve from that standpoint. All right, let's look at the Apple chart. I wanted to go through some of the requests that came through. And what we notice here is we had this uptrend in place. It was being pretty resilient. And then we sort of broke through this key support area and then rallied back and sort of failed at it. And now we're turning back down. MACD is now getting back through. Both lines are getting through the signal line. Red DI has broken out above the prior green. So I think the sellers are in control right now. We're going to need to see, again, we're going to need to see this come down, either make a test of this low or some kind of a higher low, and then turn back up and get back up through this key resistance zone if things are going to turn or show signs of improvement. But we're starting to see the relative strength line show weakness here, and I don't think that's the type of sign we should be looking for. Again, we want to be looking for stocks that are holding up better than the market, number one, and number two, also have good overall technical characteristics, both trend and momentum. And this stock doesn't really meet that criteria. It doesn't mean that it has to go down a lot. It just means that I don't think you're going to make a whole lot of money in this, especially relative to the market. Okay, let's look at DD because I got a question about this. It's got low ADX on the monthly chart, and then it also has and has had a little bit of low ADX on the weekly, but we broke down to the downside in this. And the more I look at this, I don't think I'm necessarily looking for some kind of a big drop, although I do think it's very possible this could come down to the 50 level. I don't know that it's getting ready to start some big decline phase, but again, maybe a test of a bigger support in this area makes sense to me, but it's not something that looks all that appealing with the violent break to the downside on heavy volume, good momentum to the downside. We've got a lot of time. To me, that I refer to this as the injured athlete, where this is someone that really got hurt and is been carted off the field and is have to go through a full rehab and mending phase. All right, this is not the type of thing where you get right back in the game the next week. It's going to take some time, usually months, probably the balance of the year, potentially, to get itself back in gear. Now, it's probably due for some kind of a retracement rally here before too long. There's a lot of room there's an open air between here and 70. So you could have a potential trade on your hands, but it's going to take some time to get this daily chart in a better position. All right, we've got LMT here, and I do think there's pretty good support. I mean, I can draw in and I can see that this is coming into a pretty decent area of support here. The problem I've got is that we still have a declining 18-week line. Yeah, the MACD has crossed over, but we don't have any strength in the buyers. What we're doing is we're losing strength in the sellers, but we're really not showing strength in the buyers. Now, I will say, I do like the sign when I get these big green bars to show up. I think that is a really good sign that everybody's kind of on the same page and there's legitimate buying going on. I also like to see the relative improvement here. All right, but I think this has some pretty legitimate resistance up at 500. I don't think it's going to be able to just get right through that without a little bit of work. So I would give this some time before considering it. Look at something like BABA. BABA was really kind of on its way to showing some legitimate improvement. It had turned the corner. 18-month was starting to rise for the first time in several years. But if you look at what's taken place, we kind of got this massive run to the upside and then a really harsh pullback. Same thing that happened the last time. So a heavy volume this time. See the difference? So this one had a harsh decline, which I'm not really that big a fan of, but there wasn't any abnormal volume. This time the volume was a little bit heavier. So I think there's some odds are we're going to form some kind of a range in here and consolidate a little bit over the next month or two. Doesn't mean it's a bad stock. We still have overall relative line that looks pretty decent. And I think the trend is still intact here, but any further weakness is certainly a re-break of 100, and I think you're in for a big waste of time. All right, so we got to watch this, wait for the daily chart to show signs of improvement before considering it. Let's look at something like Docusign, which I've been kind of attracted to because we had this turn, we had this 18-month, moving to the upside, and then we stall down at the big round number at 100, which makes sense. But look at the orderly pullback and the way this has been developing. I also like the price pattern. The volume pattern. Look at the good volume that went in, and we really haven't seen abnormal volume coming out. So I think there's signs of accumulation taking place. Now, this is a little sloppy when I look at the weekly chart. So what I need to take place is I need this line to come down. I need these to come and meet up, all right, while the MACD comes down a little bit closer to the zero line. I want to see the ADX get down under 25. I think if we get all that to take place over the course of the next, 2 or 3 weeks, something like that, then I could get a little bit more intrigued by this. But watch and see how this does on a relative basis. See if this continues to maintain good, strong relative performance. And if it does that, we want to keep those stocks. This is the type of stock we want to keep on our watch list. Why? Because it has trend, it has momentum. The momentum characteristics are good. It's still in a pretty good overall trending pattern, right? And it's going through a correction, but it's still in a bullish trend. And it's got relative performance so far. So keep an eye on any stock that's kind of pulling that off. Now, something that really bugged me when I did my big review over the weekend, was what I saw in the semis. It's not that they're going down. Like, this is a big drop off of a peak, right? But this is what bothers me. You go through this sideways pattern, tight sideways pattern, and then violently break, right? And then you get back up and you basically rally back up to the underside of that. We've got strength in the sellers, and we've got, pretty good momentum to the downside. I think these are going to have a very hard time turning themselves around because they violently broke the support level and didn't get right back above. So I would consider this to have a little bit more weakness. It's possible this wants to head down to the next support area at 50. So you got to be careful with stocks like this. Now, let's look at something that's completely different. This is a stock that's actually holding up really well, this Crowdstrike. This got in trouble last year, violent sell-off. And from that point on, after it hit the 18-month line, here, you see this big drop came down and found support. It has really been on the mend and improving. And now, again, look at the relative strength. This thing is actually turning up and about to break out. So we get relative strength improvement while we still have a pretty good overall trend. The momentum conditions are showing that there's not a lot of selling strength. The sellers are just not that strong. So even though when market got hit pretty hard and tech got hit pretty hard, this is one that I would be watching pretty closely just based on the way it's been acting. Thanks for watching today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these techniques, you can go to my YouTube channel. It's called Invest Like a Pro. Have a great week, and we'll see you next time.